Well, strong close on Friday. Follow through in the pre-market. Bond market's closed, but we'll still do some good price action. Warren, he's buying in between filings. That's interesting. Analysts busy on this Monday morning. Preview a big week of earnings. See Lagator on a Monday instead of a Friday to set up the options markets. Let's get this week started on a good note. It's pre-market prep.
Welcome to Benzinga's Pre-Market Prep.
This is a volatile puppy here.
It's all about execution styles and strategies.
All right, good morning, traders and investors. As I said, opening up in the green in uncharted territory, up nearly 9 handles at 58.6850. The buck having a good day here, still on resistance here at the 103 area, up 28 cents, 102.95. TLT bond market's closed, but that doesn't keep the TLT from going lower, down 42 cents at 93.28. Crude taking a hit, down $1.56.74 even. Gold and silver both in the red. Silver a little bit more on a percentage basis, down 37 cents at 31.38. Gold taking a little breather here. That's down 640, 26.70. And Bitcoin having a good day. Nice 2-day run here. The futures are up over 65,000. That's $1,770. It's 65,075. Good morning to you, Dennis, here on this Monday morning. Bond markets are closed, but doesn't look like it's going to stop from keeping this market going higher.
This TLT keeps going down. We're going to have to get Jim Tassoni back on here to see if he has covered that short, because it's just going down every day. This is just the story, the hidden story that nobody is talking about. I mean, the bond market is not doing well at all here. Obviously, we know short-term rates are tracking lower here with Fed, but long-term rates are going higher. And this is a problem for a lot of stocks. So, we've talked about this before as well. Bring an AB here, get AB started here as well. IWM did go and have a good day on Friday, Joel. So it was a nice relief rally here. I'm trying to remember back to Friday. We got the PPI, right? That's what moved us?
Yeah. Thursday was CPI, and then it was weird. It was a Thursday and a Friday, and benign numbers, right? For both.
Yeah. So I mean, from a technical perspective, the IWM looks fine. From a technical perspective, the markets look great. S&P is making new highs. At what point in time does the market start paying attention to the bond market, though? Does it just not care? Can we go up? This is why we need Jim on here again, because he's traded bonds, and he knows this kind of stuff too. But can we go up in a market environment where long-term rates are going higher? Apparently we can, but this is, starting to be a little bit of the elephant in the room. I mean, I'd like to see the TLT stabilize here. I'm pretty fully invested. I do have some cash, obviously. I always keep some cash, but I've been buying stocks on dips and loading up these and loading up different stocks, and you look at this and you're just like, is this a concern? Is this a red flag? I'm asking the chat as well. Is the TLT a red flag, or does it not matter to this market?
It doesn't matter, Dennis. Nothing doesn't matter. Nothing matters.
It doesn't matter until it does.
More doesn't matter. It doesn't matter. It doesn't matter. That chart that Jim sent us last week? Yeah. It doesn't matter. It's good. That means that the economy's doing okay. That we fought higher rates. It means everything's fine, Dennis. I mean, come on. It's good. Keep the long end out there. Keep the rates a little bit higher. For your fixed income people, the people don't want the risk, in equities or Bitcoin or whatever. So I stability. Maybe I've been wrong on the rate cuts, quarter here, half there. Stability in rates is what this market wants.
It may just be, to Jim's point when he was on this show as well, as just stable, like, the natural, like, getting back to like long-term rates being higher than short-term rates, normalization of rates. That's what Jim was calling for, and maybe that is what we're naturally getting. I just, wouldn't have envisioned it being this, like, vicious. Everybody who is playing the TLT for the breakout above 100 is getting hurt here. Seriously. And if you look at the stocks themselves, AB2, you're looking and you're saying, well, I don't see it. Like we're starting to see, obviously the S&P and the Qs seem to be, Qs are almost all-time highs. S&Ps make new highs every day. But there's individual stories here that are still not pretty. It's not like an everything rally. There's been a lot of sectors participating. It's not just tech. There's lots of other sectors participating as well. But, like Caterpillar, for instance, and maybe this brings us to our rating of the day, made a new all-time high on Friday. So some of your cyclicals, some of your industrials, some of those stocks are doing very well still. So it's not just tech. But at what point in time, does the TLT start to matter to some of these other stocks? That's my concern.
Well,
so
it
Caterpillar
doesn't
is your
matter to
rating
the
of the
banks.
day. What's
What
that?
about the banks? The bank, we got new leadership. That is, we will
Well,
continue
that's
to
it.
find
So,
new leadership.
yeah, and the banks are fine with it. They seem to be fine with long-term higher rates. So, and again, this was an earnings-driven play too, Joel. The banks definitely did not do what they normally do, which is they usually rip on the initial earnings and then sell off. This is the market that does the unexpected. It is one of those markets where it's not just textbook. Some strategies are textbook still, but there's been a lot of unexpected moves. The JP Morgan move on Friday
Wow.
was incredible. I mean, JP Morgan at one point in time was up almost $10. It's a huge move for JP Morgan. Obviously, we got more bank earnings coming this week. Columbus Day, it's Thanksgiving Day in Canada there. So, you have a light news day today. But tomorrow morning, we're going to get into BAC. Tomorrow morning, we're going to get into Citigroup and Goldman Sachs. Interactive Broker is going to report there as well. Wednesday, we got Morgan Stanley, just looking at the banks, Morgan Stanley and USB. So we've got some more bank earnings coming. Is the bar now higher for Goldman? Is the bar now higher for Citi? Is the bar now higher for Bank of America, considering that we just had a huge move in all those stocks and they didn't report yet?
And how about that move in BAC, man? Warren, maybe Warren's done for now. He got below 10%. Look at that move in Bank of America on Friday. Anyone that was fooled that he was going to be there at 41, they got rolled over. But Dennis, the bar is definitely higher for the banks now. And you do have Bank of America this week. I saw Goldman Sachs tomorrow morning, Morgan Stanley Wednesday morning. I don't know, were you Schwab more of a brokerage, but yeah, I think you got a super high bar now for these banks.
Yeah, definitely higher for these banks, the ones that haven't reported yet. I've always said, if you're going to report good earnings, you kind of want to be first. If you're going to report bad earnings, you kind of want to be second. That's just how it works, because if obviously another company reports and they disappoint, then your disappointment's not going to be viewed as harshly as some of the other ones if they're reporting first. So the first report the bad news. Speaking of bad news, we'll get to Caterpillar because we teased it. But speaking of bad news, AB, we had a Friday night news dump here with Boeing.
Yeah.
And obviously, Boeing trading down here. Give us those details there. It's always interesting when you get, bad news on a Friday night. You're like, is that intentional? Are they trying to they know all the traders are gone and back with their families? Are they trying to get this one through as opposed to doing it on Monday morning when everybody's sitting on their desk? What was the news on Boeing, AB?
Yeah, going from BAC to BA here. So on Friday, natural transition there. On Friday, Boeing announced preliminary Q3 revenue $17.8 billion versus $18.43 billion estimated. So that came in lighter than expected. Sees preliminary Q3 loss per share of $9.97. They also announced a 10% reduction in its workforce. This is, of course, amid an ongoing strike at Boeing. So they're announcing more job cuts there, preliminary guidance that was below analyst expectations. The earnings do not look good here. So it's one of those things, though, where it feels like Boeing has already gotten beat up so much and people are just expecting the bad news at this point that even on this report on Friday, stock's only down about 2% this morning, $2.83 here. So I was expecting it when I saw this on Friday for it to open up even more this morning, but hanging up a little bit here after that Friday night news dump.
It's seller exhaustion in Boeing, and the news flow and the news train here just continues to be negative. They come out every other day. We keep saying it and jokingly and seriously on the show that you buy this thing and you think, oh, it's technically starting to start, and then they come out with another bad headline. and then they come out with another bad headline. I mean, the fundamentals of this company are in shambles, folks. So can they turn it around has been the big question. So is this the big like news dump, like the let's just throw the kitchen sink out on a Friday night when nobody's paying attention here and just tell you how bad it really is? Because this was bad. I mean, they're talking the job cuts are out of necessity here because they're burning a lot of cash here right now. They lost, they're projected, so they were projected to lose. I don't have it in front of me. Do you have the numbers there, AB? They reported preliminary numbers Friday night. I didn't write it down.
The loss per share?
Yeah.
$9.97, I'm seeing.
And they were supposed to, because they had on I forget who was on CNBC was saying, but I think it was supposed to be like $2 a share, Joel. So they lose $9 a share in the quarter. Like this company right now is a cash burning machine, and they know it. So that's why they are trying everywhere to cut expenses here now. But now they've even got the union strike going on, so I mean, there's like expenses are going to go up once they settle over there. Like, where is the like light at the end of the tunnel here? Because I'm looking at, I'm trying, to like take off my glasses and see if I see any glimmer of light out there for Boeing, but I don't see any from a fundamental perspective. The only thing going for this is that everybody has sold so much stock here that it's like just seller exhaustion. It's shocking to me that you can lose $2, be expected to lose $2 a share, announce on a Friday night that you're going to lose $9 a share, and the stock only falls $3. That's shocking in itself. I guess, they're saying, well, the job cuts are going to maybe help a little bit, but this thing, if it was just a normal company, like that wasn't just being sold relentlessly for the last 2 years, we'll be down 10% at least on this headline, but it's only down 2, and I get why. It's seller exhaustion in here. Does this mean, if this thing turns green on this, is this the time to come in? I'm not touching it because I don't want to buy a company that's just burning cash left and right that comes out with a bad headline every other day. Like, when's the next window blowing out, or the tire's going to go off, or something like that?
Or something. Those are
fundamental mess.
A couple things here. First, on a technical note, you got a double bottom to look at, 46.26, 46.30. You're still $1.50 away from that. So if you have a target on the downside for a short, as far as a potential long goes, someone mentioned here, I want to buy it at 140. I have no idea why. I mean, still that looming secondary. We heard a rumor of that, but maybe, decided to do the job cuts. But the other thing that I just wanted to mention, and Dennis, you've mentioned this over the past, and regarding Tesla, right? And how negative the analysts are. And if they get off their keister and they start, either going to neutral. Well, what about all these guys who are still in a buy rating at Boeing? I mean, what do you need? I mean,
is that what we're looking at right now? All of these people are buys still?
Yeah.
Gosh, what if they have to throw in the towel? And EKS making a point here too. There was a rumor like talking about an offering last week. The companies that do offerings are the companies that are burning cash like crazy. So EKS, I think so. Like there was rumors, I forget who it was, that they could float as much as $10 billion. I think so. I think they're going to probably do a secondary offering because the company is just burning so much cash right now. They probably need to out of necessity. So do you want to invest in companies that are burning cash, union strikes to get more money, having to lay off employees out of necessity, and, having problems with the product itself? I mean, stranding the astronauts up there, Joel, like they can't do anything right.
Anything good.
This is literally the company that does absolutely nothing right. So it's hard to invest in it. But I get the long term. I get that there's a duopoly in airplanes. I get that there may be a turnaround story here eventually. I just need to see some light to show me a turnaround story. I'm not against playing turnaround stories here, but there just doesn't seem to be a turnaround coming anytime soon here. And that's why it's hard. I know the market, gets ahead of it. And, it would be a very big day if it could go green today, but I'm not taking that shot. I'm going to sit this one out.
One more thing, like on the offering, they probably called up Goldman Sachs voicemail. Called up Morgan Stanley.
Voicemail. We don't want to run this.
We're out of office.
They'll run them.
We're called Wells Fargo.
They aren't getting voicemail. They want to run them.
When we're like, no, yeah, okay. You want to do an offering? we're not putting our name. I mean, that's also another possible thing. So they, so they do the job cuts instead. I mean, like, I hate just bashing stocks and bashing companies.
Yeah,
We
me
always like
too.
to try and find a positive. But absolutely, Dennis, for all the years that we have been trading and investing together, have you ever seen such a negative news flow for such a long period of time?
So long.
This has started since 2019, and we're
Yeah.
5 years later. Now,
It's
pandemic didn't help, right? But
Yeah. It's
negative
5
news
years
flow.
of negative headlines for Boeing. You're absolutely right. This company, again, I'll just say, maybe their new management's going to turn it around, and there always is the possibility of a turnaround story. But why bag hold it? Why be the hero and say, yes, it's different this time? Because you want to know something? There's people who've been buying this stock for 4 or 5 years that say it's different this time. And yes, some people picked it up at $100 after COVID. There is some people still up in this. But really, when we look at it and where the market has been, this has been dead money for 5 years, and deservingly so.
Well, when we
didn't talk sports.
Yeah, Joel's got his Lions shirt on. I mean, the Lions looked great yesterday, but it was kind of a bittersweet win. Obviously, losing one of the premier defensive players in the league. So we'll have to stay updated on that with Aiden Hutchinson. But when we were talking about Bank of America, we had a segue. We could have gone either way. We could have gone from BAC to BA, or we could have gone from BAC to SIRI. So let's go the other way now and go to SIRI, because while Warren Buffett is continuing to cut his share in Bank of America, he made a new addition for the first time in a while that we got in the filings, because he went over 10% in Sirius XM radio. So Buffett obviously seeing some value here in SIRI. The stock is trading up now 3.5% this morning on the news. What do we think about this? Because I used to listen to Sirius XM radio back in the day. I don't anymore, and I don't really know anyone that still uses it, but clearly Warren Buffett's seen some value here.
Yeah, and it's interesting. I kind of see it as like old school. Why are you buying in satellite radio? I don't totally get it myself. But with that being said, I mean, you can't argue when the whale is buying. He hasn't bought anything. So obviously, we get the disclosures in 13F filings there, but in between, we only get the disclosures, to your point, when they go over 10%. So now he's over 10%, and we see the filing. But we know when Warren Buffett starts selling, he sells for a while. So is this going to be one of those cases when Warren Buffett starts buying, he buys for a while? Do we have a 24 to 25 floor on SIRI now where Buffett buy zone is? Maybe we do, because, he's, to give you a perspective here, over the course of the last month, I believe they've said he sold $6 billion worth of Bank America. He's only bought $87 million in the last, few days of SIRI. So if he decides we want to put this up to a bigger position, he could be buying for a while here, folks. So just keep that in mind. I did trade this. I saw the filing from my Benzinga Pro on Friday night and actually picked some up. I flipped it out after hours because it was just getting silly town. It got up to silly town, and when it was going, I was flipping it out in the high 26s because I was like, well, that's a little bit too much. And then it went to really silly town, and you won't see this on your charts, but it was even higher than that on the RHIB platform, trading up almost over $28, which just seems like ridiculous, because this isn't a new position. This is just adding to a position. So it's come in now, but I think some of these after hours traders, the 4 a.m. traders, where was it at 4 a.m., Joel? It was 27, eh?
Yeah. Let's make sure I got the 24-hour chart. Yeah, we're looking. Yeah, 27:30. That marks.
That's just ridiculous.
Yeah.
So on a new position, if this was a brand new position that we didn't know that he had owned before, I would say, yeah, maybe a couple bucks. But it's just an ad. So I was like, $1. It's probably worth $1. And that's about where it is. So it's kind of fair value here right now. When it starts going $2, ring the register when it just pops up $2, $3, and it's not a new ad, just, in addition to an existing position. But I still think on dips now, 25, maybe I'm going to be playing it like the Oxy. We played Oxy off that floor for a while. I think you got a safe zone. Maybe, I think, obviously I don't know. Maybe it was a one and done, but he's rarely a one and done. He bought for 3 days in a row. I think he could buy again. So I think keep that in mind. The 25 level on SIRI, I think, is a buy zone until we see Warren Buffett stop buying. I'm going to write that down. Yeah, 25 zone for me.
Yep, old school media too. And I mean, with all the what's going on, and with all the with the TV and the cable cutting and stuff. I mean, I listen to the radio for the few times I'm in the car. Don't exactly have Siri, but maybe Warren is basing it on me and you moving over to Siri. And then if we move over to Siri, then the network will
We get on
actually,
Siri.
yeah, we get
Put
on
us on
Siri.
Siri. Benzinga's going to get us on Siri there too. So
That'd be
we'll
a
be
task.
everywhere. So,
But looking at this technically,
Yep.
I want to say two things. One, reverse stock. We haven't had many be success, but we know what happened to GE, right? GE was one of the few stocks did a reverse split to the promised land. We've seen what that's done. So Siri getting a boost from Warren. They did the reverse split. So unfortunately, you don't have all the technicals like you used to, because it was $1.5, $2, $2, or whatever. But here, boom, 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 boom. I mean, halfway. Wow, way back a halfway on this. I don't know. I'll go with you, Dennis. Maybe this $25 area.
I think so.
Yeah, the top of yesterday's range, 25.60 is halfway back on this. So Warren taking the dip into the radio.
Yeah,
Maybe Warren's
so I think so.
I was gonna say maybe Warren's a big Howard Stern fan, and that's why he's buying Sirius here.
He might be.
I had a Sirius radio when I first got my car. I leased it, and it came with like the first free 6 months with Sirius XM radio, and it was nice while I had it. But then once it ended, and they were like, "Oh, it's going to be $25 a month or whatever," I was like, "That's not worth it. I can listen to whatever I want to listen to off my phone." So I don't know. Let us know in the chat if you guys use it. Also, I think Paul answered my question, Dennis, that I had earlier about what was the last stock that Buffett made a new position in, because he had already previously owned Siri and was buying more. It might have been Ulta was the last stock that Warren went out and bought for the very first time. So
yeah, I think so.
Since he's bought Ulta, though, it hasn't. I don't think he's up on the position yet. And to your point, Dennis, I don't know if he's added that much to his Ulta position since that initial purchase.
Well, we won't know until the next filing, remember. Unless he goes over 10%, we don't find out until the regular, 13F filings that come out. So that's one thing to consider. So I had a great question, though, which I just, I think sometimes we got to stop, the show, especially on the slower news days, for a little bit of education. Jesse just asking, how do I determine fair value on something like this? Like I was saying, I think it's overdone, when Siri gets up to 27. I think it's overdone, definitely, if it gets up to 28. That's all experience, folks. That's all just my own. I've specialized in interpreting news for the better part of 20 years. So headline interpretation. If you really talked about what I do as a trader, there's lots of traders that say, how do you make money trading in the markets? I'm a technical trader. I use charts. While I'm a fundamentalist, I buy good companies at reasonable valuations. The way I make majority of my money is headline interpretation. I make money off the headlines. And when I see a headline, I've seen it before, so I kind of know what it's worth. I know when Buffett takes a new position in a smaller company, it can sometimes pop 10% because it's Buffett. It's huge. But that's a new position that we haven't known about in the past. So if you see Siri popping up 10% on just an ad, that's overdone. That's a little bit, too much, I would say. So that's why at that point in time, if I was long, I would sell it, and I would even considering shorting it, which I did last night. So, and I've covered it now because I feel like 3%, like I said, I think it's worth $1. Well, look at this. Here we are. Now you're quite a few hours digested from it. And, traders are coming in and saying, okay, yeah, it's kind of worth $1. So just knowing it. Same thing with upgrades and downgrades. Well, who upgraded it? Are they a big stick? Is it a small company that is, is it a contrarian call? Is it a momentum call? All those things come into play. But when you trade news and trade headlines, and using Benzinga Pro, like I have for as long as I have, that gives you the edge that I have. And that's a news interpretation. So when something goes too much, I short it. If something's not going enough, I buy it. Sometimes I'm wrong. Sometimes it's just I can't believe it moved that much. And, I get run over. And that can happen too. So again, you just got to obviously you're not going to be right 100% of the time. But if I'm right 55% of the time, I'm going to make money in the long run.
Where do you think the Warren buy was announced? Looking at this expanded daily chart.
We all know this.
Yeah.
320. It was trading in August at $325 on August the 14th. And then it gaps up on the chart to $360. So I'm pretty sure it was right in there. correct?
Okay. Yeah. So this is when Warren, I don't know if he started buying here, or or he look at this consolidation period. So I mean, you made the comment he may not be up on the position. I mean, I don't think he started buying below, 360, or maybe he was trying here. We don't know what his average price is, but they tried to fill the gap on it, and then boom, it's right back up. So I would have to say, if I had to take a guess, that just based on the timing and looking at the chart, he's probably still up on that. He's still up, even though it has, it's had its dips and dives and ducks, but still, you got to pay attention. Especially in this atmosphere when he's been so heavy cash, he's selling something. He probably told the guy, go to the Bank America Post and sell me 100 million, and then drop by Alta or Siri. Well, Siri's NASDAQ, right? And pick me up a little. So Warren, moving the money around.
Dip, dive, ducking, and you missed dodging. You missed
Yes.
dodging. The 5 Ds of Dodgeball. Such a fantastic movie. What are the 5 Ds? Dodge, dip, dive, duck, and of course dodge once again. Love that movie.
I don't know if our audience is they might be a little bit
They know it. Our
too
audience is
old.
awesome.
No, Dodgeball is like the perfect, because like that movie came out probably when I was like 13 or 14, so that was like perfect age for like me and all my friends used to quote that in school, and I'm sure people that are slightly older knew it as well. But all right, before we get to our guest CC Lagator here in a few minutes, let's do some macro talk. We do have oil getting crushed this morning. USO trading down. It's actually come back a little bit. It was about down 2.5%. Now it's come back to around $76. But this comes as OPEC is talking more about demand. They lowered their demand forecast for like the third time in a few months here. So I think still some worries about China's demand and the strength of China's economy right now. I mean, China was the big talk over the last couple of weeks as they announced all this new stimulus, but now the questions become, is this stimulus going to be enough to really help the economy out there? And so oil demand in question again this morning. You're seeing a bunch of energy names trading lower on this news.
Yeah, so you've had such a rally in oil as well over the course of the last couple of weeks, and now you get a headline here that's knocking us back down. Does this put oil back in the dumpster here or not? I mean, and again, it's been separation here in the oil stocks themselves. ExxonMobil holding up through the entire oil sell-off, now making new highs, which is incredible considering where some of the other oil stocks are. We know Oxy, Warren Buffett, has not been the good one. He should have been buying Exxon apparently and not Oxy. I think he may have some buyer's remorse on that Oxy, but there's certain oil stocks that just hold up well. Like even in this sell-off today, you got the USO down 2%. You got the XLE, which is just full of Exxon at only down 0.7%. XOP is getting hit hard. And then you got Exxon. Just best of breed. Just quietly best of breed again. It's always good to buy best of breed stocks.
Geopolitical situation is always something that weighs on the oil market. So you did have that big rally. I heard something interesting from Sully this morning and on CNBC, and he was talking about Israel's counterattack, and if they actually do go after the oil refineries, and which would affect the Iranian economy, that it would actually be a negative for oil because of would cut down on the consumption, and they would have to they'd have more supply on there. Crude is just, it just has a mind of its own with headlines. This is I've actually kind of almost given up on trying to chart this, but you're down to $1.48. You haven't taken out your 2-day low at 73.26. So we'll keep an eye on that. I don't see any big downside for crude oil. And then once again, geopolitics, will determine the future price of crude oil.
All right, not sure if, maybe we can throw this in the macro talk. I don't know. It's probably worked its way into that at this point. But in the crypto world, we did have a slight rally in Bitcoin, which is moving some crypto stocks higher this morning. Saw some people in the chat discussing that. So MicroStrategy, Coinbase, each trading higher this morning.
Yeah.
Again, this is just on a rally of Bitcoin. Bitcoin's been volatile because the U.S. government is actually talking about selling its reserve of Bitcoin. I think it's about $4.5 or $5 billion worth of Bitcoin that it seized from things like the Silk Road. And so people are worried that if the government unloads off of that Bitcoin could trade lower. But I think Bitcoin's so big right now that $4.5 billion, like even a pretty big whale sell like that, probably shouldn't shake the markets too much, but it might give some other traders an excuse to sell if they are looking to get out. But so you've had some extra volatility in the crypto world.
I mean, MSTR is always, if you want to play it, this is the levered play on Bitcoin. We know they're all in, obviously levered right up on it. So if you think you're going to have this huge rally in Bitcoin, MSTR is always a good way to play it. And I mean, look at the stock. Is this new all-time highs again for MSTR?
Oh, Joel,
where is Bitcoin?
Joel, you're on mute.
Where is Bitcoin?
Bitcoin's at
right
about
now relative to the highs. How far are we from all-time highs?
Bitcoin is at about 65,000. I believe the all-time high is around 74,000. So it's probably about 10-15% off its highs.
It's just so impressive that this, again, we always say buy best of breed stocks. And if you are a Bitcoin bull, this is the one, because they just give this thing, they pop this thing before any of them. I mean, look at all the other crypto miners like Coinbase, not a miner, but Coinbase is your other main stock, if you're thinking about crypto. And it's been in the gutter really for a while here now. And then you obviously have all the miners that are just an epic disaster, like Riot, $8 from 80, Mara, $16 from 80. We know Hive has not done well either. We love Frank Holmes, but it's not been a great place to be either. $3 from 25. And then you have MSTR. And you just have Michael Saylor just sailing on top of the whole crypto world here, where they cannot stop buying the stock. Even though Bitcoin price doesn't go up, and it hasn't gone up really here for a while, there's MSTR making new all-time highs. Man, Michael Saylor, hot, so hot.
Someone in the chat was asking, why does MicroStrategy go up, but some of the other names do not? And what they said, Christian asked about Riot and Mara. So right now, a lot of the Bitcoin miners, even when Bitcoin is going up, aren't that profitable. So MicroStrategy has a way different business model, if you will, than a lot of other companies in the crypto space, where MicroStrategy is basically just a holding company for Bitcoin that
levered up. We do offerings to buy lever up Bitcoin. It's a levered long Bitcoin, not mining anything.
Right. So the miners haven't done as well. MicroStrategy, which has this kind of unique business model, if you will, where it's essentially just, again, a holding company, a levered play for Bitcoin. When Bitcoin goes down, they spend money and buy more Bitcoin. And I wonder what their average cost is. Someone in the chat can probably throw that in there, what MicroStrategy's average cost of Bitcoin is. But either way, that should help explain why they don't trade together, because they really don't have the same type of business whatsoever.
It's just crazy that, when 2022, when Bitcoin got down to 16,000, and they were calculating that if Bitcoin fell under 10,000, that MicroStrategy may actually go under because they were so levered up. But Michael Saylor just held firm and kept buying all the way down there. I mean, just nonstop buying and buying and buying and believing and buying and believing and buying. And I mean, this is what it's turned around. The stocks went from 13 to 212. in the last year and a half. There's probably no stock, no stock that is up 2,000% when your underlying stock that or thing that you're tracking is 16,000 to 65. So it's up about 300%. Well, that's the power of leverage, folks. When you are on the right side of the leverage, works really well.
All right, we do have our guest of the day hanging out backstage. One of our favorite options guests. We've got CC Lagator from OptionsAI. Gonna help us break down what's going on in the options market. So without further ado, let's go ahead and welcome CC on the show.
Is it Friday? Is it an option expiration?
What a long week.
CC Lagator is going to be cranking up that golf game later in the week. So we got to get him on here today. And boy, oh boy, we were just discussing with one of our other guests about the market at all-time highs and a little bit of an elevated VIX here over the next. Break that down for us, CC.
Yeah, it is really interesting. Typically, if we didn't know what was coming up on the calendar over the next, 3 to 4 weeks. Typically, when you're at all-time highs and you see rising volatility, it is generally the sign that you're about to see, or you're in the middle of like a blow off top, right? And you all were hitting sort of like the IWM subject earlier. And IWM is always an interesting one to watch for like the ends of those market rallies, right? Where it goes from, there's a healthy IWM rally where it's a small cap rally, kind of like, you know, catching up and maybe even outperforming. And then there's that blow off top small crap rally, right? At the end of a market rally. And that tends to be when you see a rising VIX, when the market's making new all-time highs, is you're like, oh, you know, you should start getting a little nervous right there. And because those are those moments when you see like, you know, the GameStop type rallies, or the, you know, Virgin Galactic. Do you remember like those kinds of moments? And it's right near the end where it's like people have run out of stuff to buy, basically. And in this case, this was one of the most, you know, sort of well telegraphed rises in option volatility ever. You know, if you had looked even 6 months ago, and I think we've talked about it on the show, is the VIX futures had been predicting this all, you know, for 6-7 months, that going into the election in particular, you know, we were going to see rising option volatility, and then theoretically market volatility, like realized volatility, right? And then on top of that, you pile, and I didn't even realize all of this stuff was happening in the same week until like 2 weeks ago. We have that FOMC meeting, which they moved back a day to be the day after the election. We have like right in the heart of earnings season. I think Apple goes like one of those days right around the election. I think Tesla goes the week before. You know, all those Microsofts, and then Netflix comes like a week or two after the election. So you have this jam-packed calendar for about 2.5, you know, weeks in that, you know, beginning of November, where, you know, option volatility, it's just going to continue to price in all kinds of uncertainty around those 3 weeks. Now, that doesn't necessarily mean that we're going to see market volatility. We could. I mean, the election couldn't be closer. There could be uncertainty. We might not even know who won for a week, right?
Yeah.
And so you have all that kind of stuff. And then, of course, the Fed, and then, of course, earnings and things like that. But right now, what's interesting is you've got rising volatility, and you've got a market kind of going sideways, right? Grinding higher. It just looks like a normal market. It looks like a normal rally. I think that IWM rally looks pretty healthy. You know, I think it would be disturbing if it suddenly went up 10%, you know, with the Qs going down or sideways, let's say. So everything looks kind of healthy, and options just keep expanding because of what's coming up on the calendar. You know, from a trading perspective, you know, it sets up a couple of interesting things into year end, and then it sets up what I would say is it's very binary. If you are trading even equities, but mostly options is what I'm referring to. If you're trading equities with an expiration within the next 3 weeks, your strategy should look very different than options trades where you're looking out a month and a half or into year end. Those are two. It's going to be a very binary dichotomy in the options market. I'm trying to Dennis said a big word earlier, so I'm trying to do it.
What big word? I don't remember what big word I said.
I forget what it was.
I usually don't use big words. I have little words. I was never that great in English.
What was the big word Dennis used? Did it have 3 syllables?
Yeah, it was something earlier. Now I can't even
I was terrible in
remember.
English. I was always just in math. I was very good in math and very poor in English.
So, CC, your natural instinct to me would be selling these shorter dated options and take it into juice, and then buying the longer dated one. Is that a good way to get in trouble, or is that the way you're looking at approaching this volatility?
No, you just nailed it. And by the way, we did not discuss that beforehand, but that's exactly right. So right now it's interesting because you've got this, you know, really high priced option volatility. Obviously you cannot be doing this in something that's about to report, right? But, you know, so Netflix, for instance, I think they go Thursday. You know, you can't be selling this Friday's Netflix thinking, oh, I'm getting really high volatility, right? And the market's going sideways. So you got to be very careful what's coming up actually for the individual names. But if you're doing, SPX options and Q options and even IWM options, you have it exactly right, is that you've got this inflated volatility and you're not seeing the market moves to justify it right now. So the SPX realized vol, which is the term for how much it's actually moving day to day, is actually quite low. It's acting like it's in the middle of the summer. But the VIX keeps ticking up, right? So you're getting that short-term volatility where you would want to be a net option seller, if you have that ability over the next couple of weeks, barring an earnings, name, like I said earlier. And then you would be, and the timing of what you're saying, you could either be doing, things as like a calendar, Joel, but I think I would be careful about that. I would be looking to time it, right? So let's say we get through these next 3 weeks. Let's say, there's no like sort of uncertainty around the election. Earnings season comes in, good. The Fed is predictable next month. Then all of a sudden, what you're going to see is all of that volatility squash very quickly. And it's going to feel, mid-November might feel like Christmas, like, kind of dead market volatility. We might go into that year-end volatility and what I mean is implied volatility in the options. You might see the VIX go from, 24 into the election to 14 coming out of it. And in that case, you might get that year-end Santa rally might start. You might get that grind higher. Now, obviously, you could see actual market volatility, where the Fed, does something weird or disappoints, earnings season disappoints, the election's weird, something like that. You might get an actual pullback, in which case the option volatility was justified. But right now, it is not justified for what's going on in the market.
So when's the last time you've seen this, the options volatility not being justified with, the market environment that, with the stocks? Like when is yeah, go ahead.
It's been a while, right? So what we've seen over the last year is when you see this VIX going higher, and even if the market's, going sideways or making new highs, it tends to be because we've got like a really important CPI coming up or something, right? So, and then it's justified. Like those weeks have been really actually volatile. I think you need to go back, sort of those moments I've been talking about, like those blow off tops where you see like this sort of small crap rally. Those are the times when it actually is justified. And what's happening there, just from like sort of an options technical standpoint, is what's happening is retail and even hedge funds and everything starts gambling to the upside, right? So they start going in and they start, buying calls in, the name that's up 15% that morning, pre-market, right? Because they're going in and they're like, I can't miss this opportunity. And I'm not investing at this point. I'm straight up gambling, but I might double my money or triple my money today, right? So that's what's happening to the upside. So call volume is pushing option volatility higher. Then at the same time, at some point during that time, big funds and smart money, quote unquote, they have to start kind of hedging because it's probably at the end of a 15% rally that year or whatever, 20% rally in the market. So they're buying some downside puts, and it just sort of pushes the VIX higher. And you can kind of sense it. You're like, man, the market's up 2% today and the VIX is up 10%. That's never a good sign. In this case, it's just sort of like, it's potentially an opportunity to be selling near-term options. Like you said, Joel, it's like, we know why the VIX is higher. It's not really a warning sign until something actually happens. And right now, nothing's happening.
Also, you've seen over the years where these whales come in and like, they buy all these options and all these VIX options, and they're like, well, yeah, maybe it's a hedge. You know what I mean? Totally. And they're going along the market. Zippity doo dah here, and I don't know if you've adjusted this already. Can you comment on the elevated skew levels of late?
Yeah, and that's basically what you just said, right? So when you see elevated skew, well, there's two different versions of elevated skew. One is when the VIX is, sort of 13, right, and vol's really low, and people start talking about elevated skew. That's simply because the VIX is low, right? And that means that if you're going, you'll just see skew because it's sort of, just the low number. You're working from a low number. So if people are buying puts at 15 vol and the at the monies are 13 vol, the skew is big just because you're working with such small numbers. When you see elevated skew at 21 VIX, it's exactly what we're talking about. And it's exactly what you just talked about, Joel. It's probably a lot of whales. They've got to hedge this uncertainty, right? They're making money in the market. They're long. Everything's kind of grinding higher. But if the Fed disappoints, if earnings season disappoints, if the election is weird, they've got to hedge that, right? They've got too much money at stake. So it doesn't mean they're going to be right, Like they're like, I'm making a lot of money. The market's up whatever percent this year. It's fine for me to spend $20 million on puts to protect those gains, right? What you're not seeing right now is you're not seeing the kind of craziness in the blow off top action. You're not really seeing those, I don't know. I haven't looked at MSTR, but you're probably seeing it in something like that. But you're not seeing it across the board. You're not seeing people go crazy in IWM. You're not seeing, some stock that you've never even heard of go up 25% that morning. You're not seeing that kind of action yet.
Do you think that's to come? Do you think that's how this ends? Like, are we start seeing that? Or do you think that this market's just different because we're not seeing that?
Well, I think you remember when from Fundstrat, he was saying like the IWM, he was predicting after that
up 40% this year, which
what was his prediction into year end?
Up 40% by the end of the year, Tom Lee, which Tom Lee's not a fan of me. He's one of the few people that have blocked me because I've called him out on a couple. And when you actually call him out on something, he blocks you. So
yeah.
Tom Lee's fine, but he's eternally bullish. So
right, which is it's a great.
It is. It's the right way to be eternally bullish. That's why I never go short my long-term investment account, because stocks do tend to go higher. Totally. But it's a lot easier to make market calls when you're just eternally bullish because the market is always on your side. That's why when you get a bear that calls it right, it's more impressive because it's hard to call bear sell-offs. It's harder to call. So, so props to him, I guess, for just always being bullish because the market does go higher.
Yeah,
it was 40% by the end of the year.
It was an available position in financial media. But like, what if that had happened? Like if we did see that kind of rally, like that's not healthy, right? So that's to me what those blow off tops feel like, and we're seeing no signs of that. Like IWM's kind of grinding higher with the market, and despite sort of what you all were talking about earlier, despite TLT looking like crap, right? And Joel, like I couldn't tell if Joel was being sarcastic earlier or not. I think you were serious, but like I think it is kind of a healthy TLT, or it's a healthy IWM rally with what TLT is doing, right? It just means we're not going into a recession. At least that's the market's assumption. So I think that kind of action is quite healthy right now. So that blow off top, now you'll know it because you guys will be covering stuff that morning where you're like, what are we even talking about? Like, why is this stock at 25%? And the same thing will be happening in the options market where it's like, I always get calls from like there's a CNBC reporter who covers, the options market, and like, she'll be writing an article and she'll be hitting me up that morning. And I can always feel like we're near a market high because she's like, somebody just bought a million calls in this stock or whatever. Can you comment on it or whatever? And those are always those signs that you're in one of those blow off tops.
Let me know next time you get the call. One last thing here before we let you go. Long-term investor, Dennis and I, for a long time, we very, very, very rarely, put on hedges ahead of events. I mean, really, the only major one was COVID. I mean, what would you say to someone, a lot depends on your age and your investment style. Going into an election here, chances are there will be, no outcome the following day. Who knows what's going to happen? I mean, is it you just ride the storm out like you normally do, and if it dips, you buy the dip, and if it rips, well, then it's good for staying in the market. I mean, especially with these elevated premiums, really,
Yeah.
Besides getting out, do you have any hedging recommendation? And like I said, this applies to a lot, someone that has, $10,000 in the market or 10 million. If you have the lower amount, you don't really have to worry about it. Any words of advice out here? I don't know if we're going to get you on before the election.
Yeah. So what I would say is I think the last time I was on the show, we talked about spending the amount of money that keeps you in a position that you want to stay in, right? And what we talked about last time was what has happened in implied volatility, that it's stayed elevated and actually has gone higher, has been this protective measure on any of that money that you have been spending on hedges, right? And you had that like sort of tailwind to your options positions. You are running out of time for that to be true, right? You've only really got 3 weeks for volatility to be a tailwind. And then volatility is going to become a headwind, assuming nothing crazy happens. So I would be looking at it right now. And I'm assuming nothing crazy happens, right? Like, I think I think we'll get through these next 3 weeks. I think there's a lot of people with billions of dollars in the market that can't afford that tail risk, right? But if you are an at-home investor, I would be looking at it from 2 different ways. If you've made a lot of money this year, if you were long some of these stocks that are just up crazy amounts, then I would be looking at it. All right, maybe I want disaster premium, a disaster hedge. But I'm not going to spend much money on it, right? But at least it'll be like I can turn off the TV. I don't have to watch CNN for a week or whatever after the election. So you've got that, and then you've got the other way to do it is that kind of I just want to, like, if the market pulled back 10% into year end, right? Which wouldn't be crazy, like a correction, or 5%. How much, how would I position for that I wouldn't be making terrible decisions, selling some of these things that I'm up 20% in this year, that I'm not selling them, basically unchanged on the year or whatever, And so that's the way I would be looking at those hedges, is like, what do I need to spend with the smallest amount of money I can spend, that I'm not doing stupid things if we do actually have like a minor pullback or even a major pullback. And those are the ways I would look at that. But you're running out of time for that tailwind behind you. You only have about 3 weeks before you could see what is the equivalent of like an after earnings vol crush in mid-November.
CC Lagator, he's the founder of Options Learn, OptionsAI, our top-notch options expert, joining us here on PreMarket Prep. And I'm going to dial you up here after the election. We got a lot to talk about. CC, getting a lot of love here in the chat. Thanks for joining us here on PreMarket Prep.
All right, thanks for having me, guys.
Thanks, CC.
Alrighty, I got my camera working, so that's good.
Hey, he's back.
I was troubleshooting in the background the whole time while CC was on, and finally was able to get it on. Looks like we had some news that broke in SoFi while we were live on the show, so let's talk some SoFi. Company gets a $2 billion agreement with Fortress Investment Group to expand its loan offering business. So SoFi, on this news, on this deal with Fortress, is trading up 8% this morning. This comes after SoFi closed up more than 4% on Friday. So I guess some people were buying this ahead of the announcement. But either way, you're seeing SoFi bounce higher this morning, continue off that strength on Friday, now approaching that very important psychological $10 level.
This chart's looked good for a while. I think we've covered it a couple of times, and it's just been sleepy. It's been one of those that's slowly drifting higher and looked like it wanted to break out, Finally kind of get the breakout there Thursday and Friday, 850 to 9, and now you get the headline here. That's going to continue to drive. Remember, optionality always has a lot at 10, so 10, we just got CC off the show, but there's probably big open interest at 10, so that's always a logical stopping point. Can it blow through there is the question. Already done 3.5 million shares, so I would think 10 is probably at least a target here. I would think it's probably going to trade 10. It's a matter of, does it fail at 10? Because we failed at 10 multiple times over the course of the last couple of years.
Good point here. Your high on to end the year, this is a weekly chart. So was 1049. You haven't been up in this $10 area in a long time. So you're getting the boost. Historically, off earnings, this thing has popped off the report and then dropped. This is a little bit different news, so we'll see how it reacts. But man, and I know it's really hard to draw a comparison between these stocks because they're totally different. But I'll even go to the monthly on this. I mean, that's one hell of a base you're building there. And I think the
Oh yeah.
last time I said something about building a major base was Baba. And the bigger the base, the more the space. And so I don't know. I wouldn't I try and let this one run as opposed to like try and pick a top. If you have a target at 10, take it. But man, that's a big base there. And if you think
It
about it,
is.
the
I
banks.
would want to be short it. I don't have
Yep.
any position in it, and I'd probably be a buyer of pullbacks. I hate chasing. I don't like to chase, and you're coming in at a big psychological level at 10, and like the optionality that we talk about there. But I'd be a buyer of dips on it from a trading perspective, anyways, because the stock is it's got that base you've talked about, and it looks like it's turning.
All right, before we wrap, we got a couple minutes. Let's touch on some ratings. We did have some big ratings come in over the weekend. So we had, or early this morning, Morgan Stanley downgrades Caterpillar to underweight, lowers price target to 332. So we talk about which banks have influence. Morgan Stanley is still one of the banks that moves stocks with its ratings. And this one is moving Caterpillar down 2% or $8 this morning on that downgrade from Morgan Stanley.
This is a huge, bold, contrarian call. Those are nice ones. Like 2/3 of your ratings are usually chase ratings, where we're just like adjusting up because the stock's gone up, or we're adjusting down because the stock's gone down, or we got to go down to neutral because we had to buy in the stocks from going down. This is a completely contrarian call, so I always respect these. When the analyst comes in and says enough is enough, we're thinking Caterpillar, take your profits now that it's time to get out. Again, a bold call, downgrading a stock that's at an all-time high to sell. They don't see that one every day, Joel.
I mean, why are they even commenting? They should have been out $62 ago at 332. Or I don't know what their price target was previously, but I mean, I don't know. I mean, all-time high, you're taking some chips off the table. The fact that you had a much lower target doesn't give me a ton of credibility in my book. Pre-market low just under 392. So if you're looking for more follow through, take out the pre-market low, down $8. If you're looking for a gap fill, you only need a couple buck rally here to 96.64. And now I think the biggest thing is that you might have sellers come down a little bit, to whatever in the upper 300s. Now the patient sellers that are not running from this Caterpillar price target reduction and
No, it's a flat out downgrade. Yeah,
it's flat out downgrade. I mean, you've been in the stock, you followed it on the way up. You want to take some profits? I don't have any problems with it.
Well, one of the things the analyst is citing is valuation headwinds. So maybe they waited for it to get up here before they were like, okay, then now this is overvalued. Other analyst ratings we had was in Flutter catching an upgrade this morning. Of course, Flutter is the parent company of FanDuel and some other gambling apps.
Wow.
British company, I believe, or maybe Irish. So JMP Securities maintained a market outperform rating on the stock, raises price target to 287. You also had Oppenheimer reaffirm their buy rating on Flutter. So a couple positive analyst notes on Flutter this morning, sending the stock higher about 5.5% or $12 this morning.
This is a contrarian call moving against the headline from Friday. So Friday, they came out with a headline that the UK ministers were considering a $3 billion tax raid on gambling firms, and they absolutely murdered FLUT on this. If you look at the chart, they hit it hard. So obviously they're coming in here and saying, hey, look, we disagree with this rating here, and, we think there's an opportunity here to come in and buy the stock on the dip. So they're buying the dip, and the stock is bouncing back significantly here. I don't know anything about the UK government policy and if they're going to tax them or not tax them. I don't know anything about that. But what I will tell you is we don't like talking sports in the show, but we're coming into a pretty big time for sports. We're getting into almost, nearing, the baseball, obviously. We have the potential for a Mets-Yankees finals here. If that can come to fruition, it gets people excited in baseball. Football's kicking, and the Lions doing very well, not to take it to sports. Hockey, we don't talk about the Oilers, but I mean, we're right in there where this is not a bad cyclical time to own the gambling stocks, the sports gambling stocks.
Halfway back of this big old move is 335. So move, counter move, news on the downside, rating on the upside. Also, you had some congestion here at 335 before you broke down. So I like that level. Let's if you're looking for another target in FLTR.
If you want to talk Tesla quickly here, I do believe Tesla is getting a pop off of SpaceX. Like that was a pretty cool thing. I don't know if you can show it, AB. Maybe you can show it, but SpaceX launched that huge rocket and then the booster coming back, and it's like an 18-story booster. So it's like a skyscraper. They're basically trying to catch, and they caught it on the first try. So that like Elon Musk was even tweeting like, we're gonna try to catch it, we're gonna see what happens, and they caught it. So I don't know if you can show that, but it was so impressive.
Yeah,
He's going
pulling
to
it
show
up right now.
Yeah, blow it up a little bit there. So this booster coming in.
You can see how fast this vehicle is moving on the left hand. What? What? We're now down to 3 Raptor engines. You can see those trucks. No fucking way!
Oops, I'll bleep that one out.
Please keep your seatbelt fastened before we lock at the gate.
How do you bet against this guy? I mean, that's the one thing that keeps me like, valuation, is extreme at Tesla. But how do you bet against this guy? The stuff he does everywhere, like it takes him a long time. And remember when he was first with SpaceX, AB, and they were crashing, they were trying to land the boosters and they're crashing and burning. Everybody's laughing at him and crashing and burning and crashing and burning. And everybody's like, he'll never be able to do that. And now he just does it with like an 18-story building, basically. I mean, it is hard to bet against Elon Musk.
Yeah, it's like old school engineering where you just kind of do it and fail and fail and fail until you figure it out, and then it starts working. And like you said, I mean, SpaceX in its infancy, it was like known for failures time and time again, but they stuck with it. And so credit where credit is due. Like that's very, very impressive. I think anyone in that space recognizes what SpaceX has done, to your point. So Tesla bouncing this morning, of course, after Friday, it traded down around 9% after the event, but we are running overtime today. Tomorrow is a T3 Tuesday. We also have a lot of earnings coming back this week. Mentioned it earlier between Netflix, Bank of America, ASML. So tomorrow we'll preview some earnings. T3 Tuesday, of course. So starting at 8:35 tomorrow, come back for another great interview with T3. We always love the guests they send there. Any other final words, Joel or Dennis, before we send everyone off on the day?
I just think we're in for, it's this market. The bulls have it. Tech is still hot. Hard to bet against tech. I'm still not a believer. I know the IWM rally was really nice on Friday, but guilty until proven innocent, because we've seen rallies here before and they just fail. And that 225 in the IWM is absolutely huge resistance here. But it's good that the rally is broadening out. I think overall we're coming into a seasonally strong period. Once we get through October, it's going to be a seasonally strong period. So it's hard to be bearish stocks even with the elevated VIX.
All righty, well, there you have it. Again, we'll be back tomorrow, 8 a.m. on the T3 Tuesday, so join us there. It'll be a very busy week, again, with all those earnings coming in, so we'll preview some of those tomorrow. Thank you to everyone who tuned in today. We will have live trading starting up right after this, so make sure to stay tuned for that. With that, we'll let you get on with your day. Happy trading, stay green, and we'll see you guys tomorrow morning.